What is going on, everyone? It's Sean, Denver real estate agent with Co-Listings, and this is your February 2020 Denver area real estate market update. My first video of 2020 for this particular channel and page, and I'm excited to give you a quick rundown on what's going on in the market. Is it a good market? Is it a bad market? Is it a seller's market or is it a buyer's market? I'm going to cover those things and answer some questions from you all that you've sent in to me. One thing I want to note here before I jump into this is that I have widened the scope of which I'm looking at this data and real estate information here. So if you remember last month or previous videos, it was a radius. This is a little bit more indicative of, I think, of what is going on in the Denver area, Denver metro area. And so I think it's going to be a little bit more accurate in terms of data. I did make that switch. It didn't look like it impacted the data too much. And so I think this is going to help, though, in giving us an idea about what's happening in the broader metro market. So let's go ahead and jump in. First thing I want to cover is median days on market. And we're looking at about 24 days right now. That's a 0% month over month change and about a 7.69 or 7.7% drop year over year. So we're off to a really good start this year. In fact, anecdotally, I can say that for myself as well as other agents that I work with, they've noticed, or we all have noticed, that about mid-January, there was a significant uptick in interest in transactions, in sales, and offers. And so I think that we're off to a really good start to 2020. It's very encouraging to me. I'm especially encouraged to know that there's more options, more listings to pick from for my buyers and for my listings and upcoming listings. Hopefully, my clients will have a lot more interest early on, even though we haven't yet quite hit the spring. We're still sort of technically in winter. In fact, as I'm filming this video, looking outside, beyond the camera, there's lots of snow on the ground. So all is good here. We're seeing a drop of days on market. It's taking less time to sell houses, which is always great for sellers. Next thing I want to cover is months of housing inventory. We're still tight on inventory. It is an extremely tight market at only 2 months. We've been sitting at 1 to 2 months here for many years. It fluctuates up and down, and we haven't quite yet seen anything above 2 months of inventory since 2013. So as I've mentioned in previous videos, when we start seeing more months of inventory on the market, we may be starting to see a little bit of a market shift, but until then, it is still very much a seller's market. Sellers have the leverage here because there's just not enough inventory. This is also a good time to say that if you are a homeowner and you're considering selling your house, this is still a really good time to do it, and I would love to talk with you if you're open to the idea of sitting down and seeing if listing your house makes sense. Number of new listings is sitting at 3,444 homes. That is a 81.5% increase month over month. That's fantastic to see. I'm very encouraged by that. A big factor of that, though, is the depth of the winter market. It does look like we're coming out of that, and maybe coming out of that a little bit sooner than what we typically would see. Typically, we would see that lift or that increase in number of listings sometime in April or May, but we're seeing this quite early, and I'm very encouraged. It's also a 20% year over year increase. So all in all, we're seeing a nice start to the 2020 real estate season in the Denver metro area. In terms of sale price, we're looking at $455,000 at a median level. That's a 2.82% month over month increase and an 8.59% year over year increase. We're seeing a steady growth. It's not extremely fast growth, breakneck growth, but it's still very healthy, a very healthy market in that it is gradually increasing year over year. We did see a pretty good growth year for 2019. So if I helped you buy a house or you've owned a house that I helped you buy, you've seen some equity grow in your home, which is always a great thing. What are mortgage rates up to these days? Well, the 30-year fixed is sitting at 3.45%, the 15-year fixed is 2.97%, and the 5-1-year adjustable is 3.32%. These are really, really great interest rates, and if you're in a good financial situation, you've got a healthy debt-to-income ratio, you've got very little debt and decent income, you can get into a house with very little down. As I talk with some of my lender business partners, they're seeing 3 to 5% down on the low end, and of course you can always put down more money, but a lot of people think that you've got to put 20% down or even 10% down, but that's just not the case these days, and you're getting a really great interest rate as well. And when we look at that 10-year look back, we're seeing some very, very good interest rates in comparison to what we've seen in the past. Certainly in the 2018 and 2019 timeframe, we saw some peaks of interest rates. They were getting really, really close to 5% until they started dropping again. And they sort of steadied out over the last 12-ish months, which is encouraging for buyers. What about unemployment rate for the local Denver area? It's really, really great still. We're sitting at 2.3% unemployment rate, and that's in comparison to the national average of 3.5%. And that is a 4.55% month-over-month increase and a 23.33% year-over-year decrease. But context matters. If we look way back at 2010 and 2011, unemployment rate was sitting at above 8%. So things are looking very, very good. If you're in Denver or looking to move into the Denver area, there's a very good chance that you're going to find a job. The local economy is very strong, and we're seeing a lot of great things happen in Denver. I'm proud to be a resident of the Denver area, and just so many good things happening, and a lot of things in different industries that are just really booming. All right, now let's jump to some social media questions from you all. First one comes from Ethan, who asks, that 29% short-term rental tax being proposed, will that skyrocket housing or drop housing like a bad habit? Well, I think probably in the short term, if this tax does go into effect, it probably will impact real estate prices in a negative way. But overall, when we look at the big picture, most people aren't buying properties for investment. So I don't think that the overall real estate market will see a really huge hit. Anecdotally, I have seen homes on the market that were purchased 1 or 2 years ago as investment properties and more short-term investment properties for short-term rentals. And so I think that there are some investors that are wanting to unload with some of the laws that have been changing, especially around short-term rentals. But overall, I don't think that even if this goes into effect, that this is going to have a large negative impact on the Denver real estate market. Thankfully, it's a little bit more mixed, and I don't expect to see a huge negative impact. Next question comes from Matt, and he asks, is it better to rent or buy right now? And this depends. It depends on your situation. Generally speaking, if you know you're going to be in an area for a long period of time, it's probably better to buy, especially with the low interest rates. And if you've got a solid job and some nice cash reserves, it might be a really good idea to take that rental and transfer that money that you would be paying on rent and put it into a mortgage. There's probably a pretty good chance that you can just transfer over equally what you've been paying dollar amount wise from rental to mortgage payment and get really, really close. Of course, it's always good to talk with a lender before you make any decisions on that, and make sure that you will be in a good position financially. But generally speaking, if you know you're going to be in an area for a long period of time, it is a better idea to pay your own self and pay down that mortgage with something that you can walk away with at the end and build some equity versus paying someone else's mortgage. If you've got maybe a job that requires you to move around every couple of years, it's probably not a good idea to make that investment unless you're confident that you want to rent that property out. and live out of state and have someone manage that like a property management company. It's always something that I'm happy to sit down and talk with you in person about, or anyone for that matter who's watching this video. If you're considering that and trying to determine if that's a good investment for you, let's sit down and talk about it and see if it makes sense. It may not make sense, but it may also make sense for you. All right, that wraps up this real estate market update for February 2020. If there was a question that you had that I didn't address in this video, I'd love for you to put it in the comments down below, or you can reach me at the contact information at the end of this video. Thanks so much for watching, and I'll catch everyone on the next market update.